Hi everyone, welcome to a big Monday market update. So happy to have you all here. My name's Sam, I'm the head analyst at CCI, and I'm looking forward to bringing you these insights every single week. Right now, the market is looking a little bit worse for wear, and it's not from a likely source. It's actually from the macro. So larger, broader, traditional market forces are providing a lot of sell pressure on a risk market like crypto, and we are likely not going to see a reversal in the fortunes of crypto until we see a reversal of fortunes in some charts that I'm going to show you in a sec. And we're just going to talk through some things, and I'll show you some other things which has taken my fancy just in this last little phase. And I want to start with the crypto fear and greed index, because I'm seeing a broad depression, anger, fear, all of those emotions. And I have been thinking this for quite some time. And if you watch my 20-minute power plays, the last few sessions I've done at the beginning of each month, it just seems to get progressively worse and worse over time. And those are kind of the things you normally see at the bottom of a Bitcoin crypto bear market. Now, if you look at the overall charts, it might not suggest that, because in previous bear markets, we've had a huge capitulation down to the 200 weekly moving average. We haven't had that yet. We'll show you that on the chart in a sec, just in case we do. But we're going into a very interesting period of time where traditional markets are facing unprecedented squeezes and pressures from different scenarios happening that no one ever thought might happen originally, apart from a lot of people in crypto, I might add. But we're seeing surging dollar, surging bond yields. All these things, including supply chain disruptions, COVID, war in Europe, they are adding up to, the mother of all bubbles popping, and that could be the credit bubble. It could be multiple different things happening at once. And in my mind, and things that we're watching at the moment, it all depends on the Federal Reserve, what they're going to do in the next few days, because they're going to come out and release their guidance in terms of interest rates, whether they raise interest rates or don't. It's likely that they will, but it's really how aggressive they go, and it will really affect markets. We're going to see a lot of, well, let's say a whipsaw of price action, in my opinion, over the next few days. But it seems like everyone is in a holding pattern for that to come. And until we see a loosening of their very aggressive stance in terms of tightening the economy while the economy is in a really bad state, till that switches back to money printing and not really worrying about the inflation that's just going to be there going forward for a while, we think, due to supply chains and things like that. When they go back to money printing full time, that's when we will see crypto really move. And when we see the dollar start to lose some of the value that it's gained over the past few weeks. The dollar surging is providing the single biggest pressure on Bitcoin right now that we've seen in a long time. And you could put yields into that, but again, that's probably getting more in-depth in the weeds. It's what we cover with our advanced clients. I won't go too much into that, but it is super, super important. Now, overall as well, I just want to voice that what's happening in crypto right now, yes, it can be a little bit depressing if you are a short-term investor and trader, but if you are here building a long-term value portfolio in crypto, just know that this is nothing new. We have suffered 70, 80, 90% drawdowns in the past. I've been here for multiple cycles myself, through different phases of the market, bull phases, bear phases, all that. We have multiple phases within different market cycles, and every 4 years we tend to have an uptick. This definitely does seem and feel different structurally and with what's happening in the world. So it's very hard to predict what's going on, but these periods of price just continuously grinding lower, it's nothing new, and eventually it does have to give way. But we do have to pay attention to the broader market factors, which in traditional finance are providing just tremendous downward pressure on crypto, and that will not change until that lessens. So just some things I wanted to cover there. So I also wanted to just throw in there, if you're here for the long term, if you're looking to put together a portfolio that's going to last through this phase, and then hopefully in the next 6 to 12 months when it will improve, this is the time to get really, really strategic about what you're doing. The most money in this market, so the best investors, the best 1% of investors, especially in crypto, they make the most money when the market is going sideways or when it is going down. And if you do not have a plan for these moments when everything is on sale, and it might go on sale a little bit lower, sure, but a lot of things that we're looking at, like on-chain situations, the fundamental situation under the market and the broader global macro situation of adoption over time, it's pointing one way, and that's up to the right. So we do have to have that in the back of our minds. This is all short-term noise. If you're a long-term investor, what long-term investor goes all in all at once? You don't. You have a clear strategy, whether you're moving into the market slowly and accumulating a portfolio that's going to stand the test of time for the short, the mid, and the long term. And that's something we definitely cover with our clients. So just keep that in mind, that you need to flip the mindset. You see market going down, you have to go, aha, well, what's going on? Is this going to maintain itself, over the long term? Is everything going to zero? Of course, it's not going to zero, but there will be projects that will be hit harder than others, and you just have to keep that in mind. But the opportunity lies in these moments where the market is horribly afraid and scared of much, much lower prices. And you need to have a plan to know that if it does get there, you can buy it at that price. So just keep that in mind. Now, I'm going to flick on over to the DXY. We covered fear and greed index. We're in a very concentrated band of fear and greed. It hasn't changed. So we'll move on to the DXY. And I just want to quickly show you, and we'll get rid of bonds there for a second, I think. Don't worry about that right now. Let's go back to the DXY. So this here, you can just see how much capital is flowing into US dollars right now. And it doesn't take a rocket scientist to see the correlations between these phases. 2021, when Bitcoin's absolutely mooning down in these areas, so 65,000, 69,000 new all-time highs. Where's the dollar? It's much, much lower. In fact, it's in a far lower ebb, down in the 89 cents compared to a basket of other currencies. Also in COVID, when we crashed down to 3,000, we're still at 40,000. But when we had the giant crash, the dollar rocketed. And right now, dollar absolutely going parabolic, and Bitcoin is feeling that sell pressure. But remarkably, Bitcoin is still holding around that top $30,000, $40,000 area. So over time, if you are a long-term investor and you look at the overall trend, we are still going up over time. This is all short-term stuff. We have these big drawdowns, but it is always higher than the previous drop. So we are moving up higher. And if you have that long-term time horizon, you are fine, as long as you've done your research and you believe in the long-term potential of some of these assets. And then you look at Bitcoin, which leads the entire market, because altcoins are going to suffer a far worse fate right now, because retail isn't here. It's a lot of the capital is being sucked out. It's going into Bitcoin and it's going elsewhere into US dollars. So you just have to factor that in as well. But I wanted to quickly show you the dollar, and now I just want to quickly show you the US stock market, because this is where a lot of the pain is coming from. So with a surging dollar, surging bond yields, US stocks are going to feel that sell pressure quite heavily, and then that reflects down into crypto and Bitcoin as well. So these are the dance and the concert of sequence of events that you can plot and plan and see what's going on. So you're not just looking at the Bitcoin chart or the altcoin chart and going, oh God, what is going on with my portfolio? There are ways to look at these macro issues and the different charts and really give yourself a clear picture, but you need to know what you're looking at. So just quickly, S&P 500 has closed beneath a very crucial support on the weekly. So here below this line, and it's just retesting it now, but it's in this territory where it's below volume. So it looks very unhealthy. Unless it really gets back on top here in the next few days, I can't see it doing anything good leading into FOMC, but we will see. FOMC is the Federal Reserve releasing their guidance in the next few days. So this here, though, plainly looks technically like it's coming down here to 4,000 or 3,800, which of course would translate into Bitcoin, and who knows how low that would go. Probably low 30,000s, if not lower. Now, if we're looking at Bitcoin here on the chart, we've been grinding sideways, as most of you know if you've been watching my videos previously, and we did have a channel that was moving up here, but so far that channel has been invalidated, it's broken down, and now we're looking into this liquidity zone, this box that I've had drawn for a couple of weeks now, and it's near this huge volume support, and this is where price, we expected it to gravitate to, and it did, and it's now forming this falling wedge, which is very, very interesting. because that's generally a bullish pattern. If we're obviously in an uptrend, even if we're in a downtrend, a falling wedge generally breaks to the upside. Now, percentage-wise, it can break to the downside too, but it's more in favor of the upside. So bullish pattern. We're also seeing the bullish momentum gaining as prices fall. So that's a bullish divergence. So there is every chance here, if you're a contrarian and you believe, okay, everyone thinks this market's going down, generally the contrarians do come out on top in most situations. The consensus is rarely right. So if we're all expecting Bitcoin to go down to 20,000, it's not going to happen. That's generally how the markets work, and then big players game it through futures and whatnot. But here, just have to watch this very, very closely. A breakdown from 38,000, if we go down to anywhere below 38,000 here, I think if we lose that, then we're going down to 33,000 rather quickly. There's not a lot of volume here stopping it. So just have to pay attention to this. On any breakup here too, it's going to have to contend with, 42,000, which is that 50 EMA, that green line there. That's not going to be easy either. So again, we're still in this chop, but nothing decisive has happened yet. We're still in this little range bound area. And if we go much, much higher on the weekly in a minute, I'll show you we're still in this very broad range that really hasn't broken at all. Now, quickly, I just wanted to show you a chart that just to me looks bearish, just to give you an idea of what we're looking at. And no, that's reset. Let me just find it up again. Let's just go to the Binance chart. So NEAR, a very popular crypto of late, got a lot of hype around it, but I think the short-term hype is over into a news event, and we see it a lot. And now this looks like it's about to break down. So I just want to show you this. See these peaks, 1, 2, 3, 4, progressively higher peaks. But overall, the bullish momentum on each of these higher peaks is lessening. So the sellers are either getting on top or the buyers are getting weaker, which is a kind of bearish sign. And now what's happened is we've had another peak here, even lower. Really couldn't get a higher peak here, which maybe invalidated all of this nastiness, but now on the weekly, this looks pretty bad. Now it's underneath the 21 EMA on the weekly, and it's just riding this horizontal support. I think this comes down. So that's some of the things we want to look at when looking at charts on the longer term. This is smelling like it's probably topped in the short term, and it's coming down for a big retrace, but we'll just have to see. But I wanted to paint that picture and show you. So this is Bitcoin on the weekly. Now, I just wanted to quickly show you the large range that I'm talking about. So we have the roof of the range, 65,000, and down here, 31,000. So until otherwise, we've had no decisive break out of this at all. We've tried to break down over here back in July 21, but couldn't. And now we're looking very, very likely as if we're coming into this box here. And this is very important because it is the 100 weekly moving average. So this area is intersected by that. I think we get there. I think we get to 36 or 35,000 in the next few days, depending on the FOMC. But I'd be very surprised if this level broke without a full-on traditional market meltdown, which is possible. So we do have to pay attention to that. Now, what I wanted to bring up too, as well, is the 200 weekly. Now, it's pretty frightening how low this 200 weekly moving average is, this red line here. So it's around about 22,000. Now, why this is important and why we have to pay attention to it, as it could be that last doorstop for any big flush to the downside, is each bull market we've had previously, or black swan event like COVID, we've gone and touched it or tagged it or gone through it. So we need to pay attention to that. Here's the bear market of 2018-19, came down to the red line, tested 200 moving average. And if we go back to 2014 as well, just down here, you can see after the big peak on here on the left-hand side in the bull market, we came back down and tested the 200 moving averages again. So there is every reason to think, probabilities-wise, that we're going to come down to the 200 and tag it. Now, there is the thought process that there's a lot of big buyers now in the market and we've matured a lot. A drop like that is pretty big, but if you think about it in these terms, it's only another 40% drop to the downside, which is very, very possible. To get into these areas, I wouldn't think it lasts there long. I think it gets bought up very, very quickly and we bounce back into these regions here. There'd be a huge short squeeze as well. That means just lots of leverage would get flushed from the system and creates huge spikes in volatility. And everything we're seeing on chain would suggest that it wouldn't stay at those levels for long. So that I find is quite interesting. Now we'll quickly move on through these charts. Ethereum, just wanted to show you here. Ethereum's actually doing okay. It's holding up well, but anything that happens in Bitcoin will be reflected in Ethereum. But just wanted to show you that it's clearly moving into this downward trend, which hasn't been able to bust through it yet. But generally, these trend lines do break. So I'd be very interested to see if this does start to move up here and Ethereum maybe leads a short rally at some point. But just interesting, Ethereum was also holding a large channel that looks very similar to Bitcoin, but not exactly the same. So yeah, just pay attention to that. But look, all eyes are on Bitcoin. You don't have to look at any other chart right now but Bitcoin. Everything else will follow. And altcoins, of course, will not see much liquidity. So, you know, you don't go... You wouldn't be investing everything, let's put it that way, into altcoins right now. You'd be, if you see an altcoin that you're bullish on for the mid to long term, you start to dollar cost average in and get some good prices as you go lower. But yeah, just making any short-term trades on altcoins right now without retail money coming in, look, a lot of them are going to grind to a lot lower valuation. This is something I just want to show you here. This is the Bitcoin dominance chart. So this shows you, out of all the liquidity in the market, how much is in Bitcoin, how much is in altcoins. We're seeing a clear reversal at a bottom pivot where Bitcoin can really run here and suck a lot of that oxygen out of the altcoins. Now, it doesn't necessarily mean that Bitcoin will go up in price. This just means that even if Bitcoin goes down, a lot of that money will still run from altcoins into Bitcoin for safety. So you've got to keep that in mind, that altcoins are the worst place to be in a risk market asset when when the traditional markets above are suffering instability. So just keep that in mind. And again, just pointing out there that retail driven coins will and are getting destroyed because there is no, mass movement of retail money. There's not a lot of disposable income right now out there, with the Federal Reserve doing their tightening and supply chain issues just driving up the cost of living with inflation, CPI, and all that. Everything's getting more expensive. So really, who has a lot of disposable income to speculate on a dog coin or a new ape coin or an NFT? The money's just not there in volumes yet. It will return. I guess that's the idea with crypto. It will come back when I guess QE starts or stimulus comes out. It looks like it will happen, but just when that is, we don't know. So maybe a prolonged period of bearishness for altcoins, but we will see. They are due for a bounce. They're heavily oversold, so these things could happen. But I just wanted to paint that picture again when you're looking at a heavily retail-driven coin like a Doge coin or a Shiba Inu or whatnot. If you've done your research, it has limited fundamental value. But if you're looking at here, if it doesn't have the constant wave of new retail participants coming in and buying the token, it doesn't have that core underlying buying power that a Bitcoin does, where you've got everyone DCAing at lower levels, which prevents it from going down too far or creating those big new floors. As soon as it goes down, it's buy the dip, stack, stack, stack. But with something like a Dogecoin, if you don't have all those new participants coming in and buying and speculating that's going to go much higher in the short term, these will just break down. If you're looking here at Dogecoin, it's had a tremendous run at this peak, and since then it's just been trending down like a ball, bouncing lower and lower and lower. And this, to me, after this pump with Elon Musk buying Twitter, this looks to me like it's coming down to the 200 moving average. It's going to bleed out to that point under 10 cents. So just wanted to make a few points there. Hopefully I haven't gone too long here, guys, but I wanted to part some insight here, and I don't foresee us seeing much momentum at all to the upside or downside until we know more from what the Federal Reserve is doing over the next few days. So guys, I hope you have a wonderful day. We'll see you next time, and see you later. Bye.